Hello there, Mavericks. Here we are. It is the second week of June. I cannot believe that we are already almost halfway through 2023. This is Rob. I'm joined by Ankit, and let's go ahead and get into exactly what happened this last week. Look, this last week was a pretty exciting week. We continued to see the equity markets go higher. We have been bullish in equities. We've been leaning bullish for about 2 months here, and we finally got a breakout from the S&P, and we're starting to see it broaden out. Now, what I mean by that, we've been talking about how the large cap tech stocks have really been the only thing breaking out and nothing else was following. We said we think that's going to change, where large cap tech actually not sells off, but probably cools off, where the rest of the markets move higher. And we also saw the international markets break out, which had been lagging behind the US markets. Now, we did get the dollar pull back. We got yields continued to climb a little bit higher, and then gold on Friday took a big spill. And for the cryptos, they mostly went nowhere. They're just stuck in a certain trading range. It was the first week of the month, so that means we get major economic reports. Let's take a look at what happened on Tuesday. Tuesday, we got higher than expected CPI out of Australia. That lit a little bit of a fire under the Aussie. The Aussie had a very good week this week. On Wednesday, we got lower than expected CPI out of the Eurozone. So higher CPI out of Australia, lower out of Europe. Again, those European currencies are not in play right now. They're actually weakening a tiny bit. So we really don't like the European currencies at the moment. Canada GDP came in a little bit better than expected. And then look at that JOLTS job openings out of the US. We've been seeing this number come down over the last couple of months, which the Fed has said they want to see that number come down. Look at that. Boom. Jump back up to 10 million. Then on Thursday, we got the ADP report out of the US saying that employment was much stronger than expected. And then take a look at Friday, the jobs report. Wow, that is a killer number, 339,000 when only 193,000 were expected. The unemployment rate did tick up. Surprisingly, the equity markets like this number. In the past 9 months, anytime there's been better than expected economic numbers, then it has been taken that the Fed is going to become more aggressive, which shoots the dollar up and shoots the stock market down. We did not see that on Friday. Ankit, were you surprised at all what we saw on Friday when we got that hot number and the equity markets rallied and the dollar sold off?
No, I mean, I wasn't surprised because, like I've seen markets, the underlying movement, it just carried on with that. I know we saw some initial volatility on it, but I think at the end, the market just followed with its trend, which has been mostly to the upside in the equity markets. I think the dollar was a little bit in the middle there because we had a back and forth in the dollar. And at the end, the dollar bulls did come along. I think the dollar has been a bit of a fluctuating play here because first half of the week, dollar was amazing. And the second half of the week, dollar did swindled. So we are seeing a bit of a back and forth happening in the US dollar. But outside of that, it seems like regardless of all these numbers coming out, the market kind of continued with it's sort of the push to the upside, which, like you said, the rally is broadening to the other markets. So that's what we are seeing here. And plus, it's a Friday. We're noticing a lot of these moves that get extended on a Friday. So overall, I think it seems like it's a very normal Friday that we have been kind of used in the past couple of months.
And you were absolutely right that the current trend has been very strong. And you can see here the S&P up almost 2%. The world index, the VT, up 1.8%. Crypto's flat. Gold had an up week, but again, got killed on Friday. Oil had a down week, but had a nice jump on Thursday, Friday. Now, we're going to be talking about oil. There's a major OPEC announcement coming out this weekend about possible production cuts. The market has sold off anyway, kind of calling OPEC's bluff. We'll have to see what happens this weekend. But of course, let's always look at the charts. Let's look at the performance. And here is the S&P. Look, I don't care who you are. I don't care how bearish you are. This is bullish. We broke out, pulled back, recovered it, held our ground here, and then look at this. And this is a nice parabolic move. Parabolic moves tend to run out of gas at some point, but for right here, right now, it's just getting started. Remember, we spent 2 months basing here. We could easily have a couple weeks where we run to the upside. As we talked about earlier, the best currency of the week was the Aussie, off of that hotter than expected CPI. But take a look at the Kiwi. Kiwi was very weak. We have seen this divergence between these two currencies. Typically, these two currencies move together. Not right now. There's a great divergence here. Second best currency was the CAD. That was our favorite long of the week last week, was the CAD. And you can see that overall, Swiss franc was the weakest, dollar weak, euro a little bit weak, yen flat. We kind of think this is where the market is likely to stay. We think the equity markets go higher, and that should help the growth currencies like the CAD and the Aussie, but not necessarily the Kiwi. The Kiwi isn't responding all that well. Cryptos were a mixed bag. Really, Litecoin was the big winner of the week. It's just been playing a little bit of catch up. The first 4 months of the year, Litecoin completely lagged the rally from the rest of the coins. Now the rest of the coins are kind of flat to sinking down a little bit, and Litecoin is playing a little catch up. I would not take this too seriously, as overall, cryptos are flat. So let's go in and take a look at charts, and let's get our market analysis for where we are. Now, the VT we've seen has broken out as well. VT is broken out as well. So we have the S&P, which is the US stocks, have broken out. The world index has broken out. We have to move to a +3. We've been at a +2 for the last about 2 to 3 weeks. This is a +3 market. Now, this means that the bulls are clearly in charge and that bears are scrambling and covering shorts. These kind of markets tend to have really sharp, fast moves and then kind of fizzle out a little bit. But look, let's not focus on the fizzle out, because that's who knows how far along in the future. All we know is right here, right now, all the trains are running one direction, and it's really going to be a nice trading environment until it fizzles out. So as you can see here, this is the world index. Again, a base for 2 months. We just broke out. There is a whole lot of energy that can be expanded here. We think that the S&P and world index stocks are likely to really do well over the next couple of weeks. NASDAQ-like stocks, they've already had their run. We think those are likely going to be rotated out of. If we take a look at where cryptos are, it's not a real encouraging chart here. The rest of the market is breaking out. So we've been in this 2-month base here in crypto as well. Everything else is breaking out, but crypto isn't. Now, that doesn't mean it won't play catch up. I could easily see crypto play a little catch up, especially if the markets are very strong next week. But it's lagging. It's underperforming. We don't buy the underperformers. We buy the outperformers. All the studies show that's where you get the best alpha, is by buying the outperformers and shorting the underperformers. Buying the underperformers, which right now is crypto, is really not the right move. Let's take a look at what is on the schedule for next week, because we do have 2 central banks here on Tuesday. Now, again, this is Tuesday at 12:30 a.m. So for us in North America, this is Monday night. We will be meeting live for the RBA rate statement. This should be a really nice trade. There is a forecast that they are not going to raise interest rates. It will be interesting to see if the RBA raises rates with this hotter CPI that they just got. And you can see Tuesday night, we've got GDP out of Australia as well. We fully expect the Aussie to be probably the best trading currency at the first part of next week. It was the best currency this week. The question is, it just went up 1%. Does it continue its gains or does it reverse? I'm open to either on that one. On Wednesday, we get the Bank of Canada rate statement. Also expected to see no change in rates. We'll have to see what happens there on that one. And then, of course, on Friday, we have unemployment out of Canada. So this week, you can see Aussie and Canadian dollar are really going to be the 2 currencies in play. And I think that's where you want to focus most of your attention. And like I said, I think you can be both sides, long or short, but lean heavier to the long side. Because again, the risk on currencies should do very, very well. So overall, we think the market's risk on. We think Aussie, Canadian dollar should do well. We're hearing from both of their central banks this week. If those central banks don't kill those currencies, they could have a really nice run this week. Let's take a look at these currencies one by one, and break them all down. First up is the cryptos. Let's take a look at Bitcoin. All right, our trend score. Look at Bitcoin. It is not trending. So the fact it's not trending, as trend traders, we're just going to say we'll check in on you later. Bitcoin Cash, not trending. No trend. There's no movement. Let's not run out into the freeway to pick up some nickels and dimes. Ethereum, no movement. Simply no trend. The only one that is trending a little bit is Litecoin. You can see it's hitting some resistance up here. If we break out, okay, I think you can make a case that Litecoin could make a run up to the 101 area. That's a decent trade. If you're going to trade cryptos, I think it's Litecoin again this week. I said the same thing last week, and it's the same thing this week. Stick with the winners. And on that note, let's get into Forex because, again, we want to do the same thing. Stick with the winners. So, Ankit, why don't you break down the dollar here for everyone, and I'll give my 2 cents after.
Absolutely. I mean, if you just take a look at the dollar, I mean, one of the things that to note here is that before we came down on a Thursday, we tested them March highs. So if you look at it from the going back to March, is this a double top or is it just a retest pullback? You know, we have the prior resistance, which is now the support. And could this be a buying opportunity? I think the dollar. So one of the things I want to talk about what happened with dollar was on Wednesday. We saw a big change. We have been sitting with a rate expectation, and I mentioned that before, that right now the rate expectation is what's driving most of the currency. So we were seeing the dollar sitting at about 70 to 80% on a rate hike in the coming meeting. On a Wednesday, we saw a sharp drop down to 20%. So it seems like going into the next meeting, which is going to be in just a couple of weeks, the expectation is not that hot. So we saw a dramatic change in the expectation. So considering that, I think we could see the dollar kind of trade within this little upper end of the range. If it breaks below that support, then we can be a little bit bearish. But I personally think without that conviction of further rate hikes, the dollar might be difficult to, spark the rally, especially when we have such a risk-on market. So, but in between, we could have some back and forth. We have a wide range to deal with. And I think that's really what I'm expecting going into next week. And I'm keeping a close eye on the interest rate expectation and to see if there's an improvement there. But until next meeting, I think a couple of weeks, we might see some consolidation in the dollar. Now, but going into the other currencies like the Japanese yen, I think this is where we are seeing a continuation. We are back at the lows here. So every little rally gets sold off. So the yen, the only lifeline for the yen here is that the equity markets start to take a tumble. We saw that like early in the week where we saw a couple of days of rally in the yen. But outside of that, I've said that before, this is a reminiscing of last year, where the yen just couldn't catch a break, and that's exactly where we are at. So I personally think that if the tide is going against you, it's better to sit on the sideline, but this is more like a one-way trade to the downside. There's a couple of opportunities in between, but I think those are short-lived, so keep a close eye on where's the next big move. And right now, if you look at the Nikkei, which is the Japanese market, it's running into new highs almost every week. And so we are seeing a big divergence taking place. So as the yen is weakening, the stock market in Japan is going up. So if you want to take a look at that, until you see an exhaustion in that equity markets in Nikkei, I wouldn't be surprised that we just see that continuation, sort of a melting up in the equity markets and a melting down in the yen. So that's where we are at with the yen. No big change to the outlook, mostly sideways to the downside. Now, looking at some of the other currencies is where we have some question marks, and that is the European currencies. Now, looking at Euro and Swiss franc, both of these currencies has taken a bit of a step back, but they're not so aggressively short. But at the same time, the question is this a buying the dip opportunity or is it sell the rally opportunity here? So we are in this consolidation phase. We are not breaking higher or lower. And whenever I see that, it is telling me sideways play. That's the range here to kind of deal with. So those are the two currencies where I think if you are sticking with the tide, I think the tide is kind of running out. And even in the British pound, which has been rock solid, and you can see that we sort of created a bit of a shorter term top here. But overall, don't keep in mind that it's still above the 20, it's above the 50. So those are just buying those pullback opportunities. But clearly on a velocity score, it is pulling back here. So I think we can have a bit of a pullback in the pound, but those pullbacks is where the money's coming in. So the European currencies are not so hot, except the British pound, not so hot there. But in the growth currencies is where we are seeing some sort of developments. Now, the Canadian dollar, as you can see, we have officially broken that 200 moving average. And the last time we broke that 200 moving average was back in last year when we saw a pretty sharp drop in the Canadian dollar. And that's the last time it was below that. One of the other things I want to point out is that the same thing like the U.S., the Canada, the expectation for rate hike has dramatically gone up. Not for the next meeting, which is going to be next week. There's only a 28% or 25% chance for a 25 basis point rate hike. But the big one is September and December. As I'm looking at the futures market there, 86%. 86% chance that 25 basis point the rate's going to go up from Bank of Canada. So that's a dramatic shift, and that is going to really keep the Canadian dollar on the upside, because here we are seeing rotation. Any central bank that is pausing, just like what we saw with the RBNZ, they're seeing a dramatic drop. And if there's any sort of expectation for rate hike, that's where the money's flocking into. So right now, it seems like that's what's really working for Canada. And if those expectation changes, we'll see what next week with the Bank of Canada, the press conference, what the statement is. But I just want to point out that there's a big dramatic change that's taking place with the expectation there. Now, the Australian dollar. Australian dollar and Kiwi are sort of tails of, two different currencies. Usually these are correlated currencies, but that's not the case right now. And I just want to point out that if you take a look at where we were in Kiwi and where we are in the Aussie. Aussie was looking terrible just a few weeks ago. And if you look at Kiwi was actually the best currency. And that's a dramatic shift in just a very short period of time. It's a dramatic shift. Why is that shift happening? Because RBNZ just said, well, we won't be raising rates. RBA, on the other hand, has, there's not an expectation for them to hike rates, but it's really solely benefiting from that divergence. I want to just kind of open that dialogue here. Is that next week, when we get the RBA, I won't be surprised that if they come out a little bit dovish, then this rally kind of fizzles. None of the central banks right now are talking hawkish. RBNZ, which was one of the hawkish ones, actually pulled back, and RBA, what has been the lagging one. So despite that increase in the inflation rate, we have to really look at what the Fed is saying. If the bank is saying no, we're not going to be raising rates, then I think that will slowly come down. And in that case, we have to take a look at Kiwi as well, because that's been very much oversold at this point, and we could see some rotation coming in as we have seen that dramatic shift in the Aussie Kiwi pair, especially in the last 2 weeks. So going to Aussie, a rate statement, I think strong, but after that, I'm not so 100%. I'm very flexible on making that change, on that. So I think this is a great time not to be married to any sort of outlook, because these expectations are changing very quickly, and we had to change widget. Same example, RBNZ changed everything with the Kiwi, went from best currency to the worst currency in just 2 weeks. I think you have to be open for other central banks and see what kind of impact does it have. But for now, follow that momentum and be aware of or be careful about these events and that the potential for these events to change things around.
And take a look at what we have as a -2. We typically don't see both the Kiwi and the yen as weak at the same time. These two are typically negatively correlated. If one is strong, the other's weak, and vice versa. This time they're both weak, which tells me this is a pretty simple trade. If the market goes up next week, you want to be short yen. If the market goes down next week, you want to be short Kiwi. Ankit, what do you think about that call?
I do like that call. I think the only sort of a reservation there is the divergence between Aussie and Kiwi. So let's say if the RBA, kind of puts out the fire with this move in the Australian dollar, I think then in that case, we could see the Aussie sort of take a lead there. So I think at this point, I like the Kiwi short as long as the Aussie is strong. But I think if that shifts around, yes, I think that's a good call there, that go after something that's weak, or something like the Aussie that could potentially turn weaker on the central bank. But I do like that call very much, because on a risk-off sentiment, I think that's really where we will see the pressure goes on, and especially as the U.S. dollar strengthen, I think those are the places where we see the most of the pain.
Yeah, I totally agree that the RBA could change it up. But going into this week, I think this is where I'm going to start. So I'm starting off with the idea and the concept that the markets are going to keep moving higher. We had a 2-month base and a breakout. I think we've got a lot more left in the tank. So for me, the trade is going to be short yen. If later in the week I see the market shaky, starting to fall, I'll look at short Kiwi, but I'm looking at short yen pretty much exclusively. And the question is, what do I want to be long against it? And I've got 4 currencies here that all look okay this next week. I'm going in first with CAD as my number 1 pick. My number 2 pick will be the Aussie, pound number 3, and dollar number 4. So let's take a look at those pairings. We're going to take a look at CAD yen. We're going to take a look at Aussie yen and possibly even pound yen. So my top trade here is CAD yen. So look at this trade on a daily chart. This has everything you want to see on a daily chart. This thing is running, it's breaking out. We just ran up, we based here for about 12 days. We just broke out here. Everything looks great on a daily chart. So the question is, where's the entry? Where is the entry? Now, we like to enter off of high bases and pullbacks. And right now, we don't have that. We have a big expansion here. So next week, I really want to see a base or a pullback. So I'm not looking to buy this thing on Sunday, maybe Monday morning, maybe Monday afternoon. But this is the one I like, but I need to see either a base and a breakout of 104.20 or a pullback. It could be as deep as 103.60. This area again, if it pulls back into this area, I want to start looking at buy points. If it goes sideways and breaks out above 104.20, I want to take a look at buy points on that one. The next trade I want to take a look at is Aussie yen. So as you can see, this is all very focused on yen here. Look at this trade. This is a one-way trade. These are the trades you want to get to where you don't get stopped out. They just keep going, and then you can add and add and add positions to this. This one is running to. Take a look at where this is. Here we are in a daily chart. We have a month of basing here between 90 and 92.50 or 92.20. It's breaking out. There's a lot of gas left in the tank on this one. So the question is just, where are you going to get in? How are you going to get in? Make sure it's a controlled entry, but you want to be on the long side here on Aussie yen. Now, pound is my number 3 currency, and right now the pound is in more of a pullback. So I'm not super excited about pound at the first part of the week, but if we do pull back, maybe pull back into this 173.70 area, somewhere in here, that to me would be a decent area to start looking for. Anka, what trades do you want to take a look at this week?
Right on that note there, I think one of the pairs that I was really watching, just looking at relative strength and weakness, was Kiwi CAD. I mean, what a dramatic, sort of a pullback here. But we have now breaking below that channel. I mean, this price action, I would say that really reminds me of how the Canadian dollar started to fall. It was the strongest currency. It went lower, and it just kept going lower. So, this thing is very weak, and you can see that just we RSI sitting at a oversold level, but there's just no buying coming in. So that is, again, the downward channel here. We can see that there is definitely more room. These are slow moving pairs, nothing fancy about it. But yeah, there's that change that we're seeing. And Rob, if you want to pull up the Canadian dollar chart, I just want to point out the CAD basket, just so we can sort of compare this move with the Kiwi. This moves, as you go back, Rob, just last year, this move reminded me of that, where we saw the dramatic drop and it just kept going lower and lower and lower. I mean, we need to see reversal signs for us to be interested in the currency. You can see this was a long base and then it's turning around here. So there's a little bit more potential for the CAD. Any sort of pullbacks I think will be bought out. But yeah, like right now we're seeing the opposite where Kiwi is just getting destroyed. And that's just a currency pair that we need to continue watching. So Kiwi goes in the top of my list here. Aussie Kiwi, Rob, if you want to pull that up here. Just want to point out that dramatic move that we've seen on the daily chart on this one. So the question now really is that can we carry this forward, especially with the RBA? So we are back at the highs that we were just, not too long ago in April. So the question is, does that become as a resistance, or does, or do we see a further breakout from there? So that's a critical level. The way the candlestick is right now is very bullish. I think we're going to close the highs of the day. But again, going to Tuesday, I think I'm very open. Aussie had a dramatic run, especially against the Kiwi. If there's a change that we expect in the Aussie Kiwi, I think I need to see that turning around in the Aussie Kiwi pairing. But for now, this is the one you want to pay close attention to if you're trying to decide, should I go with the Aussie, should I go with the Kiwi? And right now you can see there's no warning signal yet that, hey, I shouldn't be long the Aussie over the Kiwi. Right now it's a clear divergence, clear moving higher. So if we get an exhaustion, sort of a gap to the upside and turn around, I will potentially make that change on Monday night or Tuesday early morning when we get the RBA. So that will be my first sort of a trading opportunity that I'll be looking at. And Rob, if you want to pull up Aussie CAD, that's another one that I'm potentially will be looking at. Let's just say that if Aussie turns out to be the weaker one, for now, for the shorter term, got a nice little rally there. But again, if you look at in the broader sense, if you, Rob, want to draw the trend line, we are, at the top of that downward trend line. This is still a downward currency that's moving lower. So this is the one outside of the outside of the Kiwi CAD. This is one I'm also open to, especially if we see a reversal in the Kiwi CAD, in the Aussie Kiwi pairing. So that's the one that I'll be paying close attention to. But as the week progresses, like I said, I'm very open to trading those news events and making the shifts when those happen, because right now a lot of the quick movements are taking place. But Rob, you're absolutely right. One of the things we need to pay attention to is the equity markets. If they keep running, the money has to go somewhere. If you look at this week, it was the Aussie. Can that rotate into something else? I think the next best winner can be the CAD and not the Kiwi right now. So CAD is the one that we've got to pay attention to. Rob, if you want to pull up Euro CAD, and maybe let's pair up a CAD against Euro and the Swiss franc. Just want to kind of show that like we are seeing the nice movement here. So I think that's the thing. If you pick up CAD against any other currency, they're moving very nicely at the lows of the day. You can see that there's definitely more room for this to drop. So any sort of buying, any sort of rallies can be really, reverse quickly here. So, I mean, if we want to find a runner, this is the runner. So this is my primary focus until Friday, when we get that, or Wednesday when we get the Bank of Canada. And I'm paying attention to those interest rate expectation. If they stay strong, we gotta stay long the CAD here. If that changes, we'll make an adjustment to our outlook. So that's my outlook for next week, Rob.
Well, thank you, Ankit. Let's go ahead and wrap this up. We both think equity markets are likely to remain bullish. Remember, we had a 2-month base and we're just barely breaking out. The NASDAQ does look tired. I don't think you want to be looking at NASDAQ stocks at all if you're looking at stocks. But the rest of the markets, the world index is just breaking out. The SP is just breaking out. I think we have a couple more weeks of continuation. Remember, Aussie and Canadian dollar both have central bank announcements. Let's make sure we're watching those. We will be meeting live for the RBA rate statement on Monday night. So Monday night, if you're a Maverick trader, come join us live. We'll be trading that. And as always, focus on the things that are moving. You can see we didn't really talk much about Euro, Swiss franc, or dollar. There's better trades out there. So go find the things that are actually moving. Thanks for joining us. Everyone have a great weekend. Goodbye, everybody.